Hello and welcome to Dialogue. Saudi Arabia is reportedly accelerating the talks with Beijing to price some of its oil sales to China in renminbi. This move is believed likely to reduce the US dollar's dominance of the global oil market. How would switching to the yuan affect the Chinese currency's international status and the global financial system? How Western sanctions on Russia may also spur efforts to use the Chinese yuan. To discuss these issues and more, I'm joined by Liu Zhiqian, Senior Fellow at the Chongyang Institute for Financial Studies of Renmin University of China, Professor Jun Qian, Executive Dean of the Fanhai International School of Finance of Fudan University, and Professor Gao Luft, Co-Director of the Institute for the Analysis of Global Security, who is also a professor at Austin Technical University. That's our topic. I'm Xu Qinduo. Welcome to the show, gentlemen. Now I'll start with you. Saudi Arabia is reportedly in talks with China to use the Chinese currency RMB or yuan in oil sales to China. So what's your gut response to the news? Why now?
I think it's a very important signal to the global market that Saudi Arabia has now, has decided to use the renminbi yuan to make the transaction. This is really very good and a positive signal to the world market. We see that more stability in the oil field and also in the international trading system could have another alternative to settle down this payment. As we know that the renminbi yuan is very stable and very reliable, and many countries are trying to use the renminbi as their tools of transactions. And of course, this is very important not only for China and Saudi Arabia, but because it's very important to stabilize the financial system globally. And we see a lot of the contributions that could be made by our two sides. But this concept will be realized sooner or later. That could be very strong driving force to stimulate the economic recovery the world widely. So in this way that we should hope that both sides could have close cooperation, and also we should consider that the hidden risks behind it, and also work out a good and positive measures to guideline this transaction, because renminbi yuan is very important in the world market, how to stabilize such a transaction and gather more experiences that for other countries, this is quite an important factor.
Professor Luft, what's your gut response to this news? We are talking about accelerating the talks between Saudi Arabia and China on the use of the Chinese currency in their sales to China. So why acceleration now?
Well, I think that the events of the past few weeks have rattled many countries and many central bankers because some unprecedented steps were taken by the West against Russia, including the freezing of central bank reserves. And by the way, it's the second time that it's happening in less than a year, because the first time, as you know, it happened in Afghanistan. So twice, something that has been sacrosanct. Central bank reserves, these are things that you don't touch. They're not yours. And all of a sudden, they're being frozen. That is a shock to the system. That is going to shape the thinking of many central bankers around the world when it comes to their allocation of reserves. It also, when it comes to petrostates, it will raise questions. Do we want to continue to peg our currency to the dollar? Do we want to continue to sell our commodities? Not only oil, by the way, also gas and food commodities and minerals. Everything is denominated with dollars. So that is going to be a moment in which everybody will have to recalculate their moves. And I think it's a watershed moment in world financial history.
Well, Professor Chen Jun, you were nodding your head while Gao is talking about, the simple reason, probably the simple background, let's say. We will talk more about that. But then if Saudi Arabia and China, they choose to do so, obviously they will benefit from such a potential cooperation. Tell us what kind of benefit, for China and for Saudi Arabia?
Sure. So for China, obviously, to have part of a larger share of the global oil market to be priced and then also to be settled in RMB is important because this means our RMB is becoming more of a global currency, at least in the commodities market. It's also very good for Chinese firms if a larger fraction of the oil and gas is priced in RMB. It's actually much easier for Chinese firms when they look at this global market. They have much less currency risk to hedge. But on the other hand, it's also very important to Saudi Arabia. We know that Saudi Arabia's currency, the rial, is pegged to the dollar for the last 50 years. That is, they have a fixed exchange rate to the dollar. So whether the Saudi oil is priced in RMB or the dollar for Saudi, they're going to still have this uncertainty between the dollar and the RMB. But as pointed out, Saudi has basically accumulated a lot of dollar assets, right? Because its own currency is pegged to the dollar. So from the standpoint of the Saudi government and investors, it's actually very important to diversify their asset allocation. And as pointed out, RMB is a very stable currency. And if you look at the medium long-term run, RMB probably will continue to appreciate against all the other major currencies. And also very important for Saudi Arabia, China is their largest trading partner. When they export oil to China, when they get the RMB, they can use the RMB to buy stuff, goods and services from China. In that regard, they face less currency risk. So altogether, this is a win-win situation for both China and Saudi Arabia.
Mm-hmm. Well, back to you, Professor Luft. Obviously, you see this, there's people see the vulnerability because of the sanctions on the Russian side and also the central bank assets, being seized by Washington from Afghanistan. So diversification seems to be the natural choice. Is it the case?
Yes, and let me just say that we're talking a lot about Saudi Arabia, but let's not forget Saudi Arabia was the main underwriter of the petrodollar system. When the petrodollar system was created in the 1970s, Saudi Arabia was the first one, and then all of OPEC countries followed, and that's how the dollar became dominant in the oil market. Now that the Saudis are looking into to exit, maybe looking to exit or to diversify, other OPEC countries, other countries are likely to follow. So that's not only a story about Saudi Arabia, it's a story about all of OPEC countries. And it's not only a story of oil, it's a story of all the global commodities, which means that if oil goes, the de-dollarization in oil markets will almost for sure become a harbinger of a de-dollarization of the entire global commodity market. Now that doesn't mean that dollar is going away. Okay, let's make it very clear. Dollar is not going away anytime soon. Just like the British pound did not disappear from the face of the earth, it's still a very important currency. It only means that we are moving from a system of currency unipolarity to currency multipolarity in which several currencies can compete against each other.
Mm-hmm. Professor Liu Zhiqian, if you look at the talks between China and Saudi Arabia, which have been going on, off and on for 6 years, are we going to see this time around substantial progress in that regard?
Yes, surely. That as we know that this negotiation and discussion have been lasting over 6 years because of different conditions, especially in international business atmosphere, and also the Saudi Arabia also are looking deeply in the situation with the relations with the United States. And also we can see that when the conditions are mature, that always in the good time and the right time that we can facilitate and accelerate the realization of the renminbi transaction for oil business. This is very important for both sides. If we recognize or conducted in an early time or in a too hurried time that we're still facing many challenges that we could not solve. Nowadays, I think that time is very good for both sides to make such decisions, as the other professors have already mentioned. That now the geopolitical situation made the situations more serious. And we can see that transaction with the Chinese yuan is more stable, more comfortable, and more secure. This is what we have learned from the geopolitical situation. And also the dollar supremacy made some more difficulties, and the United States make dollar transaction as a tool for sanction, as a tool for political purposes. So it is already, that means the weaponized or politicalized, but this is nothing to do with the renminbi yuan. That's why that many people in the countries now prefer that to use the renminbi as the transaction tools because of the, not only the stability, but also it's a very confidence and also very reliable currency. By doing so, that China also can promote all the relations on the equal, transparent, more secured ways that to safeguard all interests and the benefits related to all countries. So this transaction with Saudi Arabia will be setting up a very good and a positive example for other countries to follow up. We hope that this procedure could be realized, could be conducted as soon as possible.
Mm-hmm. Well, Professor Luft, obviously, you know, as the Wall Street Journal reported that a senior U.S. official called the idea of the Saudi Arabia selling oil to China in Chinese yuan highly volatile and aggressive, quote unquote, and not very likely. You know, it's like between China and the U.S. It's somehow people see that, you know, geopolitical factors are also playing a role. Is that the case? You know, some people say, oh, the Saudi Arabia is calling the U.S. bluff by releasing the information that we are talking to China to pay in Chinese yuan. So what do you make of that?
Well, that's an interesting question. First of all, I do not exclude the possibility that a Saudi leak about this was mainly to get Washington's attention. The Saudis have a lot of reasons to be upset with Washington. The relations are not great at the moment, and it may be that it's just a way of them to signal to Washington, listen, if you don't change your attitude towards us, if you don't take us seriously, we can do a lot of harm to the very same system that underwrites your economy. But definitely, I think this is the beginning of a new phase in U.S.-China relations. We've started with a trade war, then we moved into all kind of you know, tariffs, economic warfare, and that's sort of the crescendo is when you start dealing with currency war between the two largest economies in the world. You can only imagine how many more fronts and tensions will be added to the U.S.-China relations as we move forward. This is not a good way to promote to move forward the relations because it's important to understand what is at stake here. What is at stake here is America's ability to fund $1 or $2 or $3 trillion a year deficit as it has been doing for the past several years. When you want to run a $1 trillion or $2 trillion deficit, you need to raise the money somehow. You increase your debt. And who is going to be the underwriters of this debt? It's countries that are willing to buy your bonds. And if they don't trust you, they will not buy your bonds, or they will not dig deeper into the hole that they are already in. You know, there are a lot of talks about China's debt trap, but the $1 trillion or the $30 trillion national debt of the United States is the mother of all debt traps, because nobody can really afford to move out of this trap, because then you lose your investment. So I think this is what is at stake. Will the United States be able to run those crazy deficits? And the only way it can do it is if it continue to sell dollar-denominated debt.
Mm-hmm. Well, Professor Chen Jun, of course, when we look at this hopeful prospect of dealing with oil sale in the Chinese yuan, of course, there's a point, because China is the top buyer of Saudi Arabia's oil in the 25% of their exports. I mean, naturally, I would say it's logic simply to pay in yuan instead of US dollar. But still, people see the limit of the internationalization of yuan because of the lack of convertibility, for example, and probably more liberalization of the financial market in China. Simply the Chinese market lack of liberalization. They would say, they point to that. So how far do you think in that respect we can go in terms of paying in yuan or the use of yuan?
So, as one of the speakers already said, even if this materializes, that is, even if Saudi Arabia agrees to price part of its oil export to China in RMB, although this is a very important step for RMB internationalization, we're still talking about the US dollar being the most dominant currency. So even if that materializes soon, it will not change the fact that the dollar remains the global reserve currency. Mm-hmm. But at the same time, as our guest already said, this can open a new path for other countries, the OPEC countries for oil and gas, maybe other countries when they're exporting commodities to China. So things can move rather quickly once this first step is undertaken. So, but on the other hand, as you said, for RMB to be truly a global currency, especially a reserve currency, RMB has to be more freely convertible. It has to be completely priced by market forces, and also the capital inflow and outflow will be more free. That said, to me, the natural next step is for the RMB to take a much bigger share in trade, right? We know that China is already by far the largest trading partner for most of the countries in the world, including Saudi Arabia, ASEAN countries, for example. For China, it makes a lot of sense, and their trading partners. For example, China and a lot of these ASEAN countries, why should we use a third currency when we do a lot of business bilateral side, right? So by using RMB, which itself is a stable currency, both sides can hedge a lot of risk, and already discussed that even though dollar remains the most dominant currency, the US economy has some issues. The Federal Reserve, you can challenge whether their monetary policy over the last 2 years is really responsible or not, among other issues. So it means it makes a lot of sense for a lot of countries, when they have bilateral trade with China, they should use China. They should use RMB as the first choice to settle bilateral trades. So I think that step is very, it could be achieved without making a lot of fundamental changes to other sides of the Chinese currency policies. And I do expect that if this Saudi Arabia-China agreement can be reached, RMB may well likely be playing a much more important role in settling trades, especially settling trades between China and their trading partners.
Mm-hmm. Well, Zhiqian, Professor Liu speak of the role, by RMB, the Chinese currency. Of course, the news came after what happened in the Ukraine crisis between Russia and Ukraine. Russia was sanctioned, by the Western countries, basically unprecedented sanctions, let's say. The central bank reserve, half of them were frozen, and also seven of the banks were cut off from the international finance messaging system, SWIFT. So people pointed to the RMB as an alternative payment system for Russia to continue its trade with other, beyond the Western countries. So do you think that's the workable way? And, what a role Chinese yuan could play probably, for example, in the settlement between the trade between China and Russia, because you can't use the US dollar, you can't use euro, you can't use, pound sterling, probably yuan is the natural choice?
Yes, I think so, because this situation is made by the United States, by the Western countries' sanction against Russia, because Russia itself didn't want to be spelled out of the SWIFT system, but the Western countries and the European countries try to split this system with Russia. That means that Russia has no way out, has no way others to do any business and international transactions. But if the business between China and Russia is still going on and is still booming, what currencies we should need? The dollar is not allowed. This is not a fault of Russian or of China. So we have to find another currency instead of the US dollar. So this situation is made by the Western sanction against Russia. Actually, one thing I think we should point out to avoid any misunderstandings in the global market. That means the transaction with the Russian business partner with the Chinese yuan is not to try to challenge the status of US dollar domination. It's not try to replace US dollar supremacy. But as we already said that for Russia, they have no other way to other currencies to do any business. And they should survive. They should still develop. To do business is their human rights, is the basic rights of any country. So by doing so, that China is trying to make this transaction more safe, more reliable, and we support all the countries who try to develop their own economy. Of course, it's better to use, or we prefer to use the Chinese yuan as an alternative. But we do not want to do it really as to replace the US dollar's domination, because I should say frankly, renminbi yuan at the moment in international market is still weak. Mm-hmm. It's not strong enough. And as we know that by SWIFT transaction every year, that China's only 3 to 5% is still far lower than euro than US dollar. So we need a lot of time and efforts to increase, to strengthen our economic power, and also to get more business opportunities to other countries that if they prefer to use renminbi yuan, that is very nice for the international market. So this is something that we should encourage and to promote.
Mm-hmm. Professor Luft, obviously, the case in Russia is like a wake-up call for a lot of, in particular, developing countries probably, if they are not allied with the United States or G7 countries. They see the potential vulnerability of their reliance on the US dollars in their central bank foreign reserve, because one day that kind of reserve could be frozen by US and even seized. Your central bank assets could be taken away by the US. So there is a need for them to diversify and then somehow renminbi to become the natural choice.
Correct. And those countries have choices that many other countries don't have. For example, they can embark in barter deals in which they don't really use the currency, but they exchange commodities against, let's say, infrastructure projects and so forth. They can engage in currency swaps. There are all kinds of things that those countries can do to lessen their dependency on the dollar system. Because let's not forget, today, 1 out of 10 countries around the world, let me repeat this, 1 out of 10 countries around the world is under US sanctions. That's a lot of countries that are facing this problem. And after seeing what they've been witnessing in recent months, they cannot feel secure anymore. So if it happened to Afghanistan and Russia, it could happen to Belarus, it could happen to Zimbabwe, it could happen to even China. So there's no limit to what could happen. And I think that until Washington wakes up and understands that this trigger happiness in using its long-arm jurisdiction and using a sanctions policy in which every member of Congress can come up with a pet project to sanction this and that, the aggregate sanctioning spree is undermining the very same system that has brought America to be what it is today. Unfortunately, I don't see this kind of mind change in Washington. And unfortunately, I see them continue to go down the same path. And therefore, I think many, many countries are looking at it and recalculating their moves.
Professor Chen Jun, as Professor Laft just mentioned, China itself could be the next target. U.S. officials, senior officials, quite a few of them have already made a threat that they would sanction China if China, quote unquote, in their words, like help Russia in the Ukraine crisis. So what should China do, along with its internationalization of yuan or increasing use of yuan to protect itself from potential sanctions from Washington?
Well, unfortunately, the risk against some Chinese institutions, financial institutions, and firms are real. So even though these sanctions against large Chinese companies would create far more damaging effects to those countries who put the sanctions on, right? Because China, large Chinese firms and large Chinese financial institutions play a very important role in the global financial system and play in the global supply chain. But nevertheless, for China, unfortunately, I would advise the institutions and the companies to be careful, not to be raising the probability of being included in these so-called secondary sanctions. That is, if you continue to do business with those entities that are on the sanction list, you might be next. So because such risk is very bad for business. On the other hand, I think for the Chinese currency, for the RMB, as I said, China has all the right to guard their own interest. And as I said, by convincing more trading partners to use RMB instead of a third currency to settle trades with China, I think that's a very logical step. And I think that if you see these sanctions continue for a long time, RMB will be used more as a trade currency, especially for those countries doing business with China.
That's a good point. Well, with that, we come to the end of today's show. Many thanks to our guests. You can also find us on the CGTN app or on YouTube. Thank you for being with us. I'm Xu Qinduo. See you next time.